Let's get to our halftime exclusive now with Altimeter Capital founder and CEO Brad Gerstner. Well, this is a treat for us. I appreciate you joining us after this earnings report. I was like, we got to hear from Gerstner. I mean, come on, we can't wait. It's your number two position.
It's good to be here, Scott. And, you know, it was a banger of a report by Nvidia. Obviously, the market's moved a lot since, you know, remember earlier this year, the stock was down at 114 on the DeepSeek scare when everybody freaked out and said we're going to have intelligence without having to have all this compute, which was clearly wrong. Freaked out again over tariffs in April. The stock got down to, I think, $95 a share. So the stock had gone from $95 a share to basically $180 a share, and they delivered a quarter that was a banger quarter. You know, look at it. It's 56% growth. This company is accelerating at scale. It's the largest company in the world. And what, you know, not only the largest company in the world, it's an incredible American natural resource. The fact that it's here, the fact that we're leading in AI, it's the most important AI company in the world. Margins at 73%. They just guided to 54 billion ex-China, right? And there were some people who thought it could be even bigger, but the stock's essentially flat today. But imagine doing all of this. This is a company that is accelerating at scale, the largest scaled build out of compute in history, despite all the wrangling on tariffs in China, despite the transition and the ramping up of a new generation of chips in Blackwell that a lot of people thought they couldn't pull off without some major hiccups. And, you know, I kind of laugh, Scott, because I look back. I remember at the end of 24, I had some friends who said, we're going to short Nvidia because they can't possibly grow this fast in 25. And they blew away expectations in 25. And now some people are wringing their hands about 26. And what did they hear on the call yesterday? Jensen said, you know, when he was on our pod last year, he said, we think the build out between now and the end of the decade is $2 trillion of total compute. Last night on the call, they said 3 to 4 trillion of total compute. He told us that inference was going to billion X, right? Why do we have this massive build out? Because inference time reasoning has led to an explosion in inference. Think about this stat. A year ago, Google per month was doing about 9 trillion tokens a month in terms of inference generation, right? Compute generation. Today, it's 980 trillion tokens. So from 9 trillion to 980, it's a 100x increase in a year. You have to build compute in order to do that. So the world is massively supply constrained when it comes to compute. They're 50, you know, he said yesterday, the world will continue to grow at 50%. So think about this. If you grow, and people asked him, are you going to grow at 50%? He said, well, I think we're going to maintain market share. So the consensus for next year is 250 billion of data center revenue. If they grow at 50%, that's only closer to 300 billion or closer to $8 a share, right? And $200 at $8 a share, you know, is about 25 times. So below market multiples in terms of PE. So here's a company that I think is hitting on all strides, has an incredible leader, and you know, I think they delivered the quarter they needed to deliver.
Let's talk about a few of the issues. Jensen Huang said that bringing the Blackwell chip to China is, quote, a real possibility. This issue has obviously been in the headlines lately, enough that you posted on X earlier today that says now is a critical time for the U.S. government to accelerate and U.S. AI companies to rapidly expand and compete around the world, including Nvidia chips in China. Ceding China and its massive AI ecosystem to Huawei and dragging our feet on licenses will only hand more market share to the China AI stack. I guess after reading that, my question is to you, are you saying that the government is in the way here unnecessarily and needs to get out of Nvidia's way?
Well, listen, I think over the last couple of years, the government has, you know, followed a course of action that they thought was correct, but it wasn't, right? The Biden area of diffusion rules created massive obstacles to the diffusion of U.S. AI technology around the world. Those have now been repealed. David Sachs is kind of leading the charge as the head of AI strategy in the U.S. government. And the president himself has now signed an executive order that says we need to accelerate licenses and we need to accelerate the U.S. AI stack around the world. It's existential. We want more market share. Just like we wanted U.S. internet companies to win around the world, we want American AI companies to win around the world. And you can't win around the world. And Jensen has made this point time and again, and it's true. China is 50% of the AI researchers in the world, right? We want Tesla competing in China. We want Apple competing in China. And we want Nvidia competing in China and winning over the hearts and minds of those AI researchers. If we cede China to Huawei, it makes it vastly easier. And we already know the U.S. has underestimated Huawei's chips. It makes it vastly easier for Huawei and the very, very sophisticated model ecosystem they have with things like Quencoder or things like DeepSeek to win around the world. And so the U.S., I think, was going too slow. We're accelerating. But this is a reminder that we need to do it. And we see some of this wrangling going on in Washington. But I think the president, he said again yesterday that he has a great relationship with Xi. I think we're going to get a big deal done with China. I think it will include Blackwells in China, and it needs to include Blackwells in China in order for the U.S. to maintain the lead. So remember, the numbers that I quoted at the top of the show, Scott, all the guidance for this company excludes China. China is a $50 billion market for Nvidia unto itself. So I believe that the probability they're going to be able to sell chips in China is north of 50%. They already can sell H20s in China, and I think they ought to be able to sell a competitive Blackwell, deprecated Blackwell chip in China as well, and I think they'll be able to.
And as a shareholder, you're okay with the government taking a piece of those sales, if that's what it amounts to, as it has apparently with the H20?
Listen, I think it's an unusual tactic, but this president has said himself, if you want to understand me, you need to understand that I'm a deal junkie, and so I'll leave it to Jensen and the president to make that deal. For me, what I think is most important is that America's best AI technologies are competing and accelerating around the globe, just as Sachs and this EO said. And it's got to compete not only in places like Southeast Asia and Europe, but if you want to maintain market share in those places, you got to go compete in China. And I'm thrilled to see OpenAI also opening offices around the world. This is what Google did in the early 2000s. Right? And by the way, Google didn't have to go to Washington to get a permission or to get a license. They just went and competed around the world. And now the world runs on the democratic principles that are embedded within Google. I want to see the same thing happen in the age of AI.
Okay. I feel like you punted on me a little bit, to be honest. I mean, this is not necessarily
Scott,
about... Let me finish. This, to me, this isn't... This isn't a deal maker at his core making a traditional deal. This is the U.S. government telling a private business, you can do business in a market, but we're getting a piece. And the slippery slope that it may present itself.
Let me steel man, okay? The case is both a shareholder, but maybe the case from the president's perspective. Okay, as a shareholder, of course, I don't want him to have to pay a 15% incremental tax to the government, right? Like, who would want that? But as the president or as Howard Lutnick, if I said, we don't know that this is 100% good for this country. We think it's good for the country, and so we're going to let you do it. But as a hedge against that, we're going to scrape a little bit of those revenues, and we're going to redeploy those into chip development in the United States or other resiliency measures in the United States, because we think that's a good hedge if this turns out not to be the case. I think it's unconventional, but the fact of the matter is this White House is doing deals around the world that are unconventional. They know some of them are going to work great, some of them won't work as great. So that's how I would steelman it. I don't think that some big boogeyman or Jensen wouldn't have made the deal to begin with.